This is a cooperative. A cooperative has money coming in, which is income, and money going out, which are expenses.
On the income statement, you'll see your income, which would be like your carrying charges, laundry, and parking. All of these are added together for your total operating income. Then it shows your expenses, which are management fees, electric, gas. All of your expenses are added together for your total operating expenses. The next important number you'll see is the net operating income. This number is your operating income minus your operating expenses. That is your net operating income. After your net operating income, you have other expenses, such as mortgage and reserves. The mortgage is what you pay to the bank every month to keep your building, to pay off your building. The reserves is what you put into an account, like a savings account, so that later, if there are building emergencies, your organization has money to pay for them. After all of this, you see your net income. Your net income can be positive at a surplus or negative at a deficit. Every month we look for a surplus. You can see here that in January there was a surplus, but in February there was a deficit. Why do you think the organization had a deficit in February? If you look, the income seems pretty much similar. All of the expenses look similar until this number is really high. Maintenance seems really high in February. Later the organization will look back at their invoices and see if they match up. But this is what an organization looks for. What are the things that stand out each month? And is my organization running at a surplus or a deficit? On this chart, you also see your total year-to-date expenses. You'll see that overall it has the same thing that was calculated by monthly, but total for the year. The most important thing is that at the end of the year, the organization runs at a surplus and not a deficit. Right now, the organization's at a deficit, but this is just March, so there's time for the organization to get their finances together. Another part of the financial statement is the balance sheet. The balance sheet is basically a summary of how the organization's finances look at a moment in time. It shows your assets, or what the cooperative owns, and liabilities, or what the cooperative owes. In the assets, you'll see the operating account and reserve account. These two numbers you should also see on your bank statements. Every month you can check your bank statements and make sure they equal these numbers. Once again, we see the reserve account here, which is important because the cooperative needs to make sure they're saving for future emergencies. You also see accounts receivable, which is what people owe to the cooperative, and land and building, which is how much your building is worth. Next, you see the liabilities, what the cooperative owes. Things such as the security deposits, one day these will have to pay back to the members. Accounts payable, some things the cooperative needs to pay but hasn't been able to yet. Maybe that's a late water payment, maybe that's a maintenance payment. Then your mortgage. These are payments that the cooperative has to make every month. So every month this amount should be going down. When you add up all of your liabilities and your capital, you get this number here. If you look back, that's the same number that was in assets.
That's why this is called a balance sheet, because the assets and the liabilities plus capital balance.
This is the organization's delinquency report. On this report, you'll see how much people owe to the cooperative. You'll see here the unit number, the name, how much they owe, and if it's between the last 30 days or more than 30 days. For example, Unit 201 Mr. and Mrs. Smith lives there. They owe $780. This $780 was from the past month, but they didn't have a balance from previous months. However, in Unit 408, Mr. and Mrs. Murdoch owes $3,400. This includes last month and previous months. People can owe for carrying charges for their unit, like these three, or this one here, the cooperative has parking that they rent out. Johnson owes $160, not the past month, but from a previous month. All of these accounts are added together to show the total accounts receivable for the cooperative. You'll see here, this is what's owed from just the past month, and this is what's been carried over from previous months.